Welcome to Next to Madison, a podcast to help you live your best life.
Hey guys, welcome back to another episode of Next to Madison. I'm excited. We actually have a guest that's coming back on almost 2 years later, and he's made some amazing developments in his company with a Bitcoin fund. So he's going to come on and talk about that and more about cryptocurrency, which is all the craze and rave right now. And hopefully we can get some tips on how to get rich and navigate the crypto world. So with that being said, I'd like to welcome Anthony Scaramucci, the Mooch. How are you?
All right. I'm doing great, Ms. Madison. You look terrific. I'm glad everything's working out well for you. And hopefully we'll get out of the pandemic. These are always more fun in person, but I've been living in my basement. I'm like Joe Biden. I've been beating up on people from the basement here, taking no prisoners, building my business. But, things are good. And I'm ready to talk about crypto if you want, or anything you want to talk about.
Yeah, let's do it. So what made you decide, because you've run a successful hedge fund prior, Bitcoin's been around for a long time. What made you guys dive into this? What was kind of the green light moment where you're like, oh shit, we got to do this?
Yeah, it's an interesting question. So I brought with me some props, if you don't mind. Okay. So, because I think it's important for people that are not in Bitcoin. Let me just take out some of my props. So the first thing that I brought with me is a book about money. And this book was written about 10 years ago by Professor Neil Ferguson. And there's also a PBS series on this. And so what is money? Well, money is basically a technology that we use between each other so that we don't have to barter. So I don't walk into the bar with my little calf. I put it up on the bar and I say, hey, here's your veal parmesan special for next week. Give me 7 gin and tonics. I just raised this calf for you to feed me alcohol. What I have is I have these little digits in my phone or my pocket or my pieces of paper in my pocket. I hand them to you. And we have this trust between each other. It's effectively a ledger. These pieces of paper are not worth anything, but they are worth something to all of us because we have this trust in each other that we're going to trade goods and services for these pieces of paper. Or just imagine those digits in your bank account. Right now, you log on to your bank account, you see those digits. Let's say I send 200,000 of those to the Mercedes-Benz dealership. Then a G-Wagon shows up in my parking in my driveway, but what are those digits? They're just electronic bits of information. And so what do we know about our money? Our money is always worth less than the goods and services that we're trading for. And what else do we know about our money? It's really just based on trust, and it's based on a ledger between human beings. Prop number 2.
Okay.
This is a book that was written in 2014. The title of the book is Bitcoin, the Future of Money. It was written by a financial journalist by the name of Dominic Frisby. And what he said in this book, the reason why I like recommending this to people is that he predicted the last 7 years. It was written in 2014, but we're in 2021. And he lays out what Bitcoin is, how it evolved, and why it's really just a technological innovation to what used to be a seashell, wampum, a coin that had the political figure's profile stamped on it. It is now in the ether. It's now been digitized. Mm-hmm. And so when these guys invented Bitcoin in 2009, it was an iteration of other DigiCash-oriented technologies, but they made it better. They made it tighter. They made it secure over the blockchain. So if I want to transfer value to you today, I can send you that cryptograph over the blockchain. It reaches your account. You now own that cryptograph. You have the value. I've lost the value. Mm-hmm. And it's done in a very airtight, super secure way. And so for the last 12 years, as this has developed and it has started to scale, more and more people, Madison, are using it. And so right now there's 100+ million people that have Bitcoins. We think that by 2025, there'll be 1 billion people. So I'm sitting there, as you know, I do these SALT conferences. Unfortunately, we weren't able to do one in the pandemic. So we're doing a talk show series on Zoom right now. But in the early days, back in 2014, the Winklevoss brothers, who are the former rowers. They were at Harvard with Mark Zuckerberg. They came up with the Facebook idea. He stole it from them. They had a multiple billion-dollar settlement. They rolled their money into Bitcoin. And so they came to see me. They explained this to me. And I said, well, to your point, you introduced me to somebody who has a successful hedge fund. What the hell do I need to be in this for? And I said to those guys, well, I wouldn't be interested unless I could see this scale exponentially, meaning there was 100-ish or so million users. And so I also needed to be sure that the regulators in the United States were not going to regulate it out of business, which is not going to happen. And then the third thing is, because Bitcoin is a tricky thing in the sense of storing it, if I send you that cryptograph and it ends up on your phone and it's stored on your SIM card, someone takes your SIM card, Madison, you've lost that money. You've lost that Bitcoin.
Yeah.
And so in the beginning part of this whole odyssey, something like 3 million coins have disappeared. You know, they're either in a landfill somewhere, they're on somebody's old phone, they're on somebody's old BlackBerry. And so now we have a proper way of storing them. Fidelity, which is the largest asset manager, or one of the largest asset managers in the United States, has a digital storage company. And they are storing these Bitcoins there. So that's what got us into Bitcoin. And so I made the move back in October. The coins were trading probably $10,000, $12,000. I made a prediction that institutional investors would take an interest in this. We also have something else going on in our society right now, is that we're producing a lot of money. The Federal Reserve has decided that they're going to have heavy deficit spending alongside of the government, and they're going to electronically create the money in order for this to happen. And we have 26% more dollars in circulation in the last 6 months than we did in the prior 244 years. If you get the stimulus passed, it went through yesterday, so it's about to be signed. That's another $1.9 trillion. You'll have 40% more dollars in circulation than you did 12 months ago. And so people are worried about that because that could lead to inflation. It's already causing asset inflation. Perhaps these beautiful homes in Colorado, or the homes out in the Hamptons, or penthouse apartments in good urban cities are going through the roof in terms of the pricing. And so we're trying to find things that we can do to have an inflation hedge. So Bitcoin represents that. And so we started buying them $12,000 to $16,000. These coins are now trading at $57,000. So it's been very successful for us. But I do think we're in the early innings. I do think this will continue to scale. If we're right and we're going from 100 million users to 1 billion users, Madison, I think these coins could trade several $100,000 per coin.
Yeah.
And so that's why I'm involved in it. So I hope that wasn't too long-winded, but I did bring some props. People want to learn about it or read about it. These are simple, easy things to read. It explains a lot of what's going on in the community and Bitcoin. And so, you know, getting rich. Let's talk about getting rich for a second, okay? Let's talk about getting rich. So there's a lot of different ways to get rich. But one of the best things that I learned at a very early age is to pay myself first. And so when I was a kid, I always took 10 or 15% of whatever I earned and I put it in the stock market. So even if I was making, you know, $25,000 and I got my paycheck, let's say it was only $500 a week, I took $50, put it in a mutual fund. And then when I made $100,000, I took, let's say I was making $2,000 a week, I took $200 and put it in a mutual fund. And so if you can train yourself through good habits to pay yourself first, you have a cable bill, you have a coffee bill, you have an internet bill, you have your budget, put yourself in your budget and just discipline through very good discipline. Every single month, pay yourself first. You end up getting rich. I know that sounds overly simplistic, but it actually works. And somebody will be listening to your podcast, say, well, not me. I'm only making XYZ dollars a year. What is he talking about? But the truth of the matter is, if you put it in stocks, you put it in things like Bitcoin, and you're patient, these things will grow.
Yeah.
And then lo and behold, you have a little bit of a nest egg.
Right, absolutely. So let's talk about your fund specifically with your Bitcoin fund. So why would somebody go and buy Bitcoin through your fund versus another vehicle, whether they're doing it directly on an exchange like Coinbase or
Mhm.
through an ETF like Grayscale?
Yeah. So that's a really good question. So Grayscale technically is not an ETF. We don't have an ETF in the United States yet. What Grayscale is a trust. And so there's a very big difference between that. Let me see if I can explain it. They put together a trust and then they listed it on the exchange. So not to overcomplicate things, but that's a closed-end fund.
Hmm.
And that fund could trade at a premium or a discount to the underlying assets, depending on the demand for the buying or the selling of that fund.
Right.
An ETF, an electronically traded fund, will trade at its net asset value every single day without a premium or without a discount. But in the United States right now, we don't have regulatory authority to have an ETF. There are 3 ETFs right now in Canada. They were approved by the Canadian regulators last month, and they're doing quite well. We expect the United States to authorize an ETF. And so, what I would say to your listeners, that would be the best way to own Bitcoin. Not my fund. The best way to own Bitcoin would be in an ETF. But if you can't own an ETF right now because they're not approved in the United States, you can go to Grayscale, as you just mentioned, but then you have a premium or
Yeah.
you have a potential discount. So you have to be very careful in terms of when you're buying and selling it. In our fund, you just get the NAV. You actually own the coins at exactly the price that we paid for them. And when you go to sell the coins, you get that exact price, no discount, no premium. And so that would be a reason why you would use our fund. You mentioned Coinbase, owning it on an exchange.
Hmm.
I don't dislike those strategies, but if you're going to own this in scale, meaning 10,000, 100,000, $1 million, sometimes I think people are concerned about owning it on an exchange
Yes.
because someone could get your password. And all of a sudden they get your password, they log on as you, and they send your Bitcoin somewhere, and you never see the Bitcoin again, or you're phished. Someone who looks like that they're from Coinbase support is reaching out to you. You respond to them erroneously, you lose your Bitcoin. Or you've got your coin on your SIM card, and
Hmm.
somehow the card gets taken out of your phone. There's a SIM card swap. You've lost your Bitcoin. So what we see happening is lots of coins are moving off exchanges, and they're being put into something that's called cold storage, which is basically, it's a server unplugged from the internet, no internet switch, no ability for someone to come in and try to hack it. And
Hmm.
it's sitting, up at Fidelity, or it's sitting in places like New York Digital Investment Group, places like that. So yes, Coinbase is a good place. You just have to be very scrupulous about storing it there.
Yeah.
If you put it in our fund, you get the protection of our balance sheet, the protection of Fidelity's balance sheet, and then we have a layer of insurance that was purchased for the fund from Lloyd's of London to further protect against any potential security breaches. So
Okay.
this is sort of an extra sturdy protection, if you will, around your Bitcoin. Now, let me just say this one last thing, because I mentioned that if you have all of these choices, owning it in an ETF would be the best because it's the most liquid.
Yeah.
And so what we did was we set up our fund so that the moment that the SEC approves an ETF, we'll be able to convert our private fund into an ETF. And so I've gone to my investors and said, you can't buy it in an ETF yet, but if you buy my fund and they approve ETFs, well, guess what? You'll end up owning an ETF. It'll just be the Skybridge private Bitcoin fund will be converted into the Skybridge ETF the moment that the regulators allow us to do it.
Okay. And so why do you think that people refer to Grayscale as an ETF then?
Well, I think because they're complicated stuff. It's actually, if you go look at it, if you log on to the internet, it's actually called the Grayscale Bitcoin Trust,
Okay.
which is unfortunately a different structure than an ETF. And so it feels like an ETF to people because they're able to trade it every day.
Yeah.
But remember, the requirement is not to have it priced at the NAV of the underlying asset. The requirement is whatever the supply demand is on that day to buy that security. And so that's the complicated thing about it.
Because I remember
And
when I first got into Bitcoin, I went into the Grayscale. And then
right.
I was talking to our mutual friend, John D'Agostino, and he was saying how high the fees are that are baked into
Yes.
the price. So I then sold those shares and then went and bought them directly on Coinbase using Coinbase Pro.
Right. There you go.
So to
So
get out
so
of that, because you weren't
yep.
going to see, even when Bitcoin was going through the roof, like the price of the share wasn't going to fully reflect it, as you were saying. So you
Yes.
weren't getting as much of the benefit. But you also mentioned storage. So when people buy it on these exchanges, then they go and they have storage. So now there's all these digital wallets and there's new banks that are actually allowing you to store them. And it's a term that's called staking, which I'm sure
Yeah.
you're very familiar with.
Yeah. No,
And some of
exactly.
these digital banks, like BlockFi, for example, they're paying you like 5.5% to store your Bitcoin there. And I think it was even higher for Ethereum and some of these other ones. So you would almost be stupid not to store it, to kind of stake
Yeah.
it there, because
Yeah. Yes, exactly. But remember, what they're doing is they're lending out your coin. Okay. So
yeah,
if you look into the fine print, the reason why they're able to pay you something for it is they're lending out the coin because people don't believe in Bitcoin, some people, and they're shorting Bitcoin. One of the reasons why Bitcoin scaled so quickly to 58,000 a few weeks back is Elon Musk announced that he owned $1.5 billion of Bitcoin for Tesla. And so all of a sudden the shorts started covering and the stock got squozen up. So in the fine print with BlockFi and these other places is there's a slight risk that they've lent out your coin. You
mm-hmm.
go to take your coin out, they're a bank. You know, if you have a run on the Bitcoin at BlockFi, there is a possibility that it will take them a while to get their coin back
Okay.
from the people that they've lent it to and to return it back to you. You see what I'm saying? So
Yeah.
you are getting paid 5.5%. That's correct. But there is a little bit of a risk. And by the way, let's use the US dollar for a second. You remember there were bank runs during the Depression because remember your money as if you ever saw George Bailey in It's a Wonderful Life, you know, he's standing at the bank counter and he says, you know, Tom, your money is not here in the bank. It's in Miss Mabel's house and it's Miss Susie's house. You know, the money comes into the bank. They then lend it out to people.
Mm-hmm.
Okay. So even though you have your money at the bank, if everybody goes and tries to get the money out of the bank at the same time,
Yeah.
that's a bank run. They can't meet the withdrawals. Okay. And
Right.
that's why we have this thing called a deposit insurance company. The FDIC guarantees up to $250,000, you know, that you would get your money back immediately if you quote unquote needed your money. You see what I'm saying?
Yeah, absolutely.
So again, not a big deal. I'm not saying that you'll lose your money at BlockFi or anything like that. I love BlockFi as an investor. I think they've done a major job. I just want to lay out all the risks. So big institutions, they would come to Skybridge, put millions of dollars with us because they know that we're never going to lend out their Bitcoin. Their Bitcoin
Okay.
gets locked up in cold storage.
Okay.
It is completely protected for them. But yes, they don't get that interest rate. Remember, you're getting paid. Always remember that was the whole Robinhood thing. Well, I'm doing the trading for free. Okay, but there's no such thing as free. Okay, so
Right.
there's obviously something going on in order for you to get the trading for free. They're selling your order flow to companies like Citadel.
Yeah.
Same thing with BlockFi. If they're paying you to do that, they're paying you that for a reason because they're making money,
Yep.
making more than that doing these other operations that they're doing inside of BlockFi.
Right, absolutely. So with all the kind of the money being printed and the
See
market
that you're a
stuff,
big time Bitcoiner, Madison.
well,
Well,
yeah, But here, that's the thing. I want to shift into some other ones too. But real quick, what do you think is going to happen to Bitcoin when we have an eventual market crash? Because we know that that's coming. We don't know when, but it could be definitely coming this year. Things have been
so
too high, and everything's going to kind of even out.
So what I would say about that is that it's volatile. We have to accept that. We have to accept that if you have something that's scaling pursuant to Metcalfe's law. What is Metcalfe's law? Well, Professor Metcalfe said that some things in the technological space are moving exponentially. And so what would be that? That would be Amazon. It grew and scaled. It has tens of millions of users. It's now a retail network. Facebook, it grew in scale. It has billions of users. It's now a social network. Google, billions of users. It's a search and advertising network. And so what Metcalfe said is if you follow the exponential growth as a result of technology and the scalability of something, you can actually measure the price of it based on the fundamentals of its growth. And so let's go to Amazon for a second. If you put $10,000 into Amazon back in 1997 and you held it this whole time, you have about $21 million worth of Amazon right now.
Wow.
Which is, phenomenal. However, you had to subject yourself to 7 periods of time where Amazon lost 50% of its value. And so go back and look at Bitcoin. Bitcoin's scaling a lot like Amazon. It's growing, then there's big divots, then it's growing, and then there's big divots. And so, yes, there will be another big correction in Bitcoin. I don't know when. I do see it as still a volatile asset as it's scaling. Notice Amazon today, 24 years since its inception, it's way more stable today than it was, say, 10 or 15 years ago. But so you have to expect that there will be volatility. I can't predict what will happen, but I can say this: if you hold it for 3, 5, or 10 years, I think you're going to do very well.
Yeah.
But you can't allow yourself to get juked out of it if there's a panic selling process. One last point about Amazon. If you had bought Amazon in 2009, 12 years after its inception, and again, Bitcoin is 12 years old. So sometimes people look at Bitcoin right now and they say, oh, wow, Bitcoin, it's gone up so much, I don't want to own it right now. And then if you look at Amazon from 1997 to 2009, you're like, oh my God, it's gone up so much. Why would I own it? Yet if you bought Amazon in 2009 and you held it for the ensuing 12 years, you're up 64 times on your money.
Wow.
And so this is why I try to tell people that the opportunity is right now in Bitcoin. It's scaling, it's growing, it has matured. You have all of this money printing going on around the world. And so therefore, this could be a very good hedge against the future potentiality of inflation.
Yeah, absolutely, because it's more of a deflationary asset. So kind of with that being said, I mean, obviously, I think from my standpoint, a dip in Bitcoin is a good thing because it's a buying opportunity. That's when you can get more and,
absolutely. No, we see that the exact same way.
Yeah. So, but there's all these other cryptos. So what other cryptos are you, excited about right now?
Well, so you mentioned my fund, my $9 billion hedge fund. So, and the acronym Fear, Uncertainty, and Doubt, FUD. So I happen to manage money for fuddy-duddies, Madison. Okay, I have these old fogies I run money for. And so I'm having a hard enough time just converting them from not being Bitcoiners into Bitcoin. So right now, I'm specifically focused on Bitcoin. That's not to say that I don't like these other assets, Ethereum and others, but I don't want to spend my time on them right now because I'm just trying to work on getting my clients over the hump into Bitcoin. Does that make sense?
Yeah, absolutely. So do you think that
you invite me on again, hopefully in 6 months or a year, I'll tell you, well, I've got these other funds that I'm working on as well.
Right, exactly. So what I just had a brain fart, but anyways, what so do you think that people will, with the other kind of cryptos that are going up, it will help Bitcoin? Or because I feel like the other cryptos kind of are priced a lot based on how Bitcoin's doing. Like that's kind of
Well, I think you're making a very good point. I think that ultimately right now, the market capitalization of all cryptocurrency, Bitcoin represents about 85% of it.
uh-huh.
And so Bitcoin is the big dog. Bitcoin has been the one that was subjected to 8,300 other potential cryptocurrencies, and none of them could slay Bitcoin. Bitcoin ultimately scaled pursuant to the full properties of Metcalfe's law. So you are correct in your assessment that everything's tied to Bitcoin, which is the reason why I'm in Bitcoin. Now, will there be emerging other cryptos? But I still think that they will be tied to Bitcoin.
Right. No, exactly. And do you think that Bitcoin has the potential to become like the global currency? Like obviously we have the reserve dollar that everything's traded in right now. Do you think in the future that
Well,
that will
well,
become it?
given the fact that you own Bitcoin, you'll be a very, very rich person if that's the case, because those coins will have to be worth many millions of dollars if that's going to happen. And so it's not that $1 million per coin, it'll be like $3, $4, $5 million per coin. And we'll be measuring things in Satoshis,
Uh-huh.
okay, which are, a thousandth of a Bitcoin. Remember, there are 1,000 Satoshis in a Bitcoin.
Mm-hmm.
And so I don't know, that could happen. I'm not saying that it won't. And if it does, that'll be a very good thing for the early investors in Bitcoin. It's hard to see it at this moment not being at least a store of value like gold. If things proliferate in a way where people lose confidence in fiat currencies and they say, well, you know what, I don't want US dollar for this factory, or I don't want US dollar for this book, I'd like you to pay me in Bitcoin,
Uh-huh.
then that will start happening. And so you have to be very, very careful with money, because we've produced 40% more dollars. And if people say, oh my God, what's the government going to do next year? Another 40%. And then all of a sudden it gets very tricky. Remember in Zimbabwe, it was costing $1 billion Zimbabwe dollars to use their taxis, right? The inflation got to be very, very crazy. I'm not saying that's going to happen in the US. We have a much bigger economy, more mature, modern, industrialized economy. But we have to be careful with this level of money printing. And I would also point out to you, because I've studied this my entire life, this additional money printing has a very bad effect on middle and lower income people.
Yeah.
Because people that own assets, their assets are going up in value, no problem. But if you don't own assets and you're relying on your time and your energy, your labor to afford things for your family, well, the wages are not going up as fast as the assets are. And so people have a hard time. And that's why you've had this rise of populism. You've had this rise of nationalism. It's all born from this desperational anger that people have about the economy and about their lot in life. And so currency devaluations, which the U.S. is experiencing right now, go study it in Latin America or other parts of the world, they have a very negative effect on lower and middle income people.
Yeah, no, absolutely. It's like the income inequality gap has just gotten so big.
Yeah. And so the producing of the money is not helping that. It's actually making it worse.
Yeah, and I think some people don't realize that, is that like this is just printing this money is definitely not a good thing. But there's ways that you can, educate yourself and kind of hedge against, the upcoming downturn that's going to happen, and take advantage of it, because you can get very rich in a bad economy as well.
100%.
Which is definitely a great thing. But so are you in Ethereum personally or no?
I am not in Ethereum personally, but if you ask me in 6 months, could I be in Ethereum and potentially have an Ethereum-based fund? Yes. I
Okay.
just want to get this up and running and scaled and get my clients conditioned about this first.
Yep.
and then start to expand into other ideas that are in the crypto space.
So how does somebody get into your fund?
So they just go to skybridgebitcoin.com
Okay.
and they get the prospectus there. You can fill it out through DocuSign, and then you can invest in the fund. We buy daily. And so, listen, it's an exciting time. I'm glad you're in it,
Exciting
and I know you've made money because we're at an all-time high. So congratulations.
Yeah, absolutely. So is there a buy-in to be able to get into your Bitcoin fund?
You mean a minimum? You mean a
Yeah.
minimum? Yeah, 20. So it's a $25,000 minimum
Okay.
to get into our fund. But once you're in, you can have smaller installments than that.
Okay.
But once the fund converts to an ETF, then it's like an ETF. It could be $500 or $1,000. We're
Yeah.
just not there yet from a regulatory perspective, but I hope to be there hopefully by the end of 2021. So I tell people, listen, I want you in our fund because when the ETF comes, you're right there. You're able to convert. If you're waiting for the ETF, you may be buying these coins at $100,000 a coin, Madison. And I don't want people to do that. I want my clients to get ahead of that.
Exactly.
And of course, we started this fund when the Bitcoin was 16,000. So my clients have been well served by our advice of getting them into the fund.
So are you guys just buying and holding? Are you doing any?
Yes.
Okay. So
No,
you're
that's another thing. It's very important. I'm not making this overly complicated. We're buying Bitcoin and we're holding it. We're not doing anything else. We're not trading it. We're not using any nonsense. I just believe in the buy and hold strategy for Bitcoin more than any of these other things.
okay. And then you're just doing the standard money management fee is how you're making money on it.
Yeah, we get 75 basis points and we priced it. So your friend was talking about the Grayscale Trust. They're priced at 2%.
Yeah.
And so we're at 75 basis points because that's where the ETFs seem to trade. So I wanted to price it right away at the lower price point where the ETFs are.
Okay. And so when do you think that this will happen? You think it's this year that we'll have ETFs in the US?
I do believe so, yes. I hope so.
What do you think's been the holdup?
Well, you've got most of our regulators are in their 60s and 70s. They don't like it. And also you remember, you've got the dollar, as you were pointing out, has had supremacy over the last 100 years. The dollar is the reserve currency of the world, as you pointed out. And, these guys would like to slow roll Bitcoin. They don't like that Bitcoin is scaling as exponentially as it is scaling. They don't like it.
You know what makes it so sexy though? The fact that the Fed can't control it.
Yeah. Well, there you go. Well, that's the
screw everything up.
that's the decentralization. Who would have thought that decentralization would be sexy? But I think it's it's an interesting word to describe it because it does apply in this case. And so that decentralization is something that people like. This is the reason why you could be sitting here 15 years from now. Someone says, no, I don't want British pounds or euros or even the US dollar. I'd like you to pay me in Bitcoin. And then you have to begin the process of trying to source the Bitcoin.
Absolutely. So do you think that's coming? Do you think eventually you'll pay your employees in Bitcoin?
Well, I think it's going to be an option. We've decided for right now that it's too cumbersome for us to do. But once the bank starts servicing Bitcoin, yes, we'll likely offer that as an option for our employees.
Okay. And do you know off the top of your head, has the Fed purchased any digital currency?
So right now, and you can Google this, the Treasury Department as of November, U.S. Treasury, owned $1 billion worth of Bitcoin.
Interesting.
So if you look at November prices to here in March, mid-March prices, they probably own now, if they didn't sell any, about $4 billion of Bitcoin.
Interesting. Because, it's one of those things where it's like, how do they start to gain a little bit more control of it, which would be for them to own it. And somebody had pushed an interesting theory that I thought, oh, well, that's weird. Well, what's a way for the government to get their hands on more Bitcoin? Well, they can have people pay their taxes, for example. in
Yeah.
Bitcoin. So if you owed $100,000 in taxes, they might say, well, you know what, we'll reduce it to 50, but you pay in Bitcoin. So that would be a way for them to maybe kind of start pulling that in.
Yeah. Well, listen, the Chinese are mining it, right?
Yeah.
They won't allow you to use it in China, but 50% of the mining is happening in China. So it's an interesting point that you're raising. I think that eventually there'll be a digital yuan and there'll be a digital dollar. And Bitcoin in some ways is the gateway or the pathway for that.
Yeah, absolutely. So because there are some companies that are starting or have started mining Bitcoin here. But a lot of people, can't mine it. There's other cryptocurrencies you can mine as an individual, but obviously Bitcoin you really can't because it takes up so much energy. So that's
100%.
there.
And that's going to be a big issue too. I mean, at some point I'm looking into buying carbon offsets for our Bitcoin position, so that it's carbon neutral from our point of view. I think we're also trying to figure out in the Bitcoin community about 45% of the mining and the sustaining of the Bitcoin network is coming from renewables. And so it's coming from non-carbon based energy. And the question is, how do you get it to 100%? So we have to work on that as well, because what you don't want is you don't want Bitcoin to be in the crosshairs of it being a climate issue or not satisfying certain ESG investment requirements. So we have to work on that as well.
Right. No, that absolutely makes sense. So they say there's 3 million Bitcoins left to mine before that 21 million.
Mm-hmm.
And they said basically based on the math or how the white papers are written that it's going to take another 100 years to mine those last 3 million.
Right.
So,
And so you have a halving cycle. The last halving cycle happens every 4 years. The last halving cycle was last May. And so you're getting 900 coins a day that are spitting out of the mining right now. And it obviously becomes harder and harder to mine those coins because the mathematical properties and the competition makes the cryptograph harder to release the coins.
Yeah.
But listen, it's a fascinating thing. All explained here, by the way, in this book
Okay.
by
So
Dominic
Bitcoin is
Frisby, Future of Money. And again, he does a brilliant job of explaining it all fairly simplistically, but also, I don't want to say the word simplistic because it's a complex thing, but he explains it in a way that you can understand it. And so to me, this is part of our future. And I think if we decide to ignore it or put our head in the sand, we're going to wake up and say, well, what happened? I will be very candid with your listeners and your viewers. I missed Amazon because I was scared of it. I thought it was too pricey. And even though it was revolutionizing retail, because I got trained as an investor that anything that's too good to be true can't be true, don't do it. I missed Amazon. But there are things in our societies that are too good to be true. This phone, as an example, is too good to be true. It could eat all the books in my little library here. I could store every single one of those books on this phone. But then there's room for my pictures, and there's also room for my music, and there happens to be room for my videos, all on this little phone. It's a Pac-Man that can eat this room. Is that too good to be true? I think it is. Go back 50 years ago. There's more computing power in this phone than landed those men on the moon. So there are things in our society that are too good to be true. Look at Amazon stock, $10,000 24 years ago, worth $21 million today. Doesn't that sound too good to be true? So I want to caution people from being too afraid. You have to accept that some things in life are moving exponentially, and a result of which they should be participating. And again, if you're nervous, and I'm not trying to tell people to put 100% of their money in Bitcoin or anything like that. All I'm doing with my clients is 1, 2, 3, 4% of your money, 5% of your money.
Yeah.
If I'm wrong and the Bitcoiners are wrong, the community is wrong, you will be still able to eat. You're not going to lose your meal. You're not going to lose your lifestyle. But if I'm right and this thing continues to scale, well, then you'll look back and say, boy, that was really good advice. And that's led to me having a larger pool of assets for myself and my family.
Yeah, absolutely. We're in very exciting times.
And how's the comedy going though, by the way? Okay. So you gotta, by the way, Dominic Frisby, if you Google him, see, most
yeah.
comedians are geniuses. I
Yes.
know that, Madison. Okay. Most comedians are geniuses. He happens to also be a stand-up comedian.
Oh, I didn't really.
He's a brilliant financial journalist, but he's also a stand-up comedian.
I gotta be friends with him.
Yeah, you see that? Dominic Frisby. I'll make the introduction. He's a good guy. He just did my podcast, Mooch FM, which I have to get you on.
I would love to be on it.
I'm gonna have my producer call you so that I can be the one asking the questions.
Yes, I love it. Yeah, no, I've really been kind of researching crypto stuff and trying to get ahead of the next big opportunity, and I'm into some cool things, and yeah, it is exciting times, and I'm actually excited for the crash, to be honest with you. I'm saving some cash. I'm ready to go.
Well, when Bitcoin went from 58 to 43,000, people were writing its obituary. Now it's 57,000. Will another crash come? Yes, but I think that the floor for Bitcoin is inching higher with each variable crash.
I mean, it's much higher. And it's just amazing. Like if you bought Bitcoin at the beginning of the pandemic, it was what, $4,000 or $5,000? I mean, the beginning of the pandemic, if you could go back in time to last year and know what you know now, you would be extremely wealthy.
That is correct. And so, but I'm going to say the same thing to your viewers and listeners about today. Don't make that mistake, because Madison and I are going to be on a podcast in 2022. Mm-hmm. And we're going to make that same statement. Boy, 2021, we were talking about this and you could have moved. But now look at where we are in 2022. It's the same thing, 2021 into 2020. And so if we're right and it continues to scale pursuant to Metcalfe's law, you'll be wishing that you took our advice today.
Exactly. So definitely you guys do your own research, obviously.
Yep.
You can go to, what is it, skybridgebitcoin.com?
.com, yes.
And do some more research on that. But I really do like the fact that you're kind of making it a one-step process, especially for older investors that are overwhelmed by buying it and then holding it and then moving it and not having it on the exchange, and then fear they're going to lose their card and then having to put like a SIM card in a safety deposit box. I like that you're really kind of making it safe and taking on that risk for them. So hopefully you'll have maybe even a retail fund one day where smaller investors can.
Well, that's the goal. The goal is to have this have an ETF, and then it'll be very small lots. I have it at a large number right now because of the way the partnership laws work. But as soon as we can convert it into an ETF, it'll be available for all retail investors. Just got to get regulatory approval.
It's exciting stuff. And tell the listeners where they can find you with you've got your new podcast now.
Yeah, so I've got Mooch FM. You can find me on Twitter, and hopefully I get invited back on Madison Malloy's podcast. You can find me here. That's what I'm hoping. Of course.
You're welcome anytime. We'd love to have you. So, well, thank you so much for for coming back on the show and talking about this. This is exciting stuff and exciting times. And you guys listening wherever you are, thanks again for tuning in to another episode of Next to Madison. And we'll see you next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@nexttomadison.com. I thank you again for listening. Bye.